Welcome to ShortView Trading. This is your morning market hit for Thursday, 14th of May. What matters today for traders? Well, following on from that bearish key day reversal technical price pattern earlier this week, the S&P was again weaker and down yesterday about 1.7% on the session, along with most other US equity indices, headline indices and key sectors which were also down. Most notable amongst them, the Nasdaq banks once again down significantly, and as you can see from the chart in front of you now, breaking below its uptrend support level. This is now the third two-day wobble we've had in the S&P in recent weeks. The first one in mid-April, one at the back end of April, and then now in mid-May. And of course with that, the S&P 500 is now at the bottom end of its range of recent weeks once again. And short-term models are starting to roll. So risk appetite models have rolled over from sell levels in recent trading sessions and are moving towards buy levels. There was some downside put buying yesterday. The put to call model is now mid-range, whilst our technical short-term scoring system shows momentum rolling over. As such, the key question now is this another two-day wobble or the start of something more sinister? And in that respect, there are three key points. Firstly, the advance over recent weeks has been narrow. You can see that in this chart we're putting in front of you now. The behavior of the tech indices and the consumer discretionary, which is primarily Amazon. So the FANG stocks have been driving this market higher, as you can see from the chart. At the same time, the rest of the market has been sideways and range bound and looks as though it's rolling over now. Added to that, there are certain parts of the market where the price action really is very poor. S&P Airlines are making new lows. The Dow Jones Transports relative to the S&P is making new lows. Again, a cyclical sign that things aren't good. Whilst as mentioned above, the banks look poor in terms of their price action as well, breaking below that key support level. And third, outside of the S&P 500 and the key equity indices, other asset prices around the world are not confirming a bounce in the global economy. Indeed, they're suggesting the global economic outlook looks weak. US 10-year bond yields and emerging market currencies have been flat over recent weeks, and you can see that in the chart in front of you now. Whilst the US dollar, an indicator of global liquidity, has gone sideways in recent weeks despite all the Fed liquidity that's been going out into the global economy and the global financial system. So neither the dollar nor bond yields nor emerging market currencies are signaling strength in the global economy and a revival and a bounce, indeed quite the reverse. Over and above all that, volumes really picked up yesterday. You can see that in the S&P E-minis, having been quiet and low for several weeks as the market trended sideways. Yesterday they picked up sharply, all of which adds to the concern we have about their outlook for the equity market from here. For full details on how we're playing this, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today? Well, primarily initial jobless claims out of the States. That's the key data point. It's a weekly data point, but at the moment it's pertinent and important to watch. Elsewhere, macro data is light. There are some Fed speakers, and there's also the Bank of Canada's governor speaking as well today. And over and above that, there's a little bit more US earnings, including Applied Materials. So that's it from us. That's your morning market hit for Thursday, May the 14th. Thank you for listening. Please do subscribe on YouTube, LinkedIn, Facebook, and/or Twitter. Thank you for listening. Stay safe and trade well.